Hey everyone, it's Zack Beck. All I can say is wow, it has been a wild week on Wall Street, specifically with the former struggling stock GameStop now going to the moon with all of the value that's been pumped into it because of the issues surrounding Reddit and specifically the Wall Street Bets group that has pumped up the price up to near astronomical levels. And now it's pitting these various individuals on Reddit against some of the most experienced hedge funds, and those individuals are now caught in between where GameStop is now the rope in this giant game of tug of war that's costing billions of dollars and causing a lot of turmoil and volatility in the market as a whole. So what I want to do right now is break down in detail what exactly is going on, what is causing the issues associated with the pumping up of this price, the various risks associated if you were to ever try and be a part of something like this, and also what this means, broader speaking, for the market as a whole as we're looking at our long-term investment strategies. So let's take our time, dive in the details, and jump into it right now. So the first thing to understand as it relates to this particular issue is what is a short sale, because that is precisely what has been transpiring right now, where hedge funds had bet that the brick and mortar retailer of GameStop was on a downward trajectory. Basically, when you short a stock, what you are doing is taking a bet that this particular company is going to fail. And what you do is you actually borrow a share from a brokerage, then you go and sell that share into the market, hope that the stock price goes down, then if it does, you go and buy the share back, take the share, give it back to your original individual at the brokerage, then you pocket the difference. So it's actually a very sophisticated tool that seems relatively simple to do, but it requires perfect timing and also requires a lot of risk. And what we've seen is some individuals who did this previously, whether it was during the dot-com bubble or even people like on Lehman Brothers who shorted different individuals like toxic assets in the mortgage industry, they were able to pocket billions of dollars and also got a bailout in the meantime. So what we are seeing right now is that individuals on Wall Street Bets saw what was happening and specifically identified this actually back in 2019, where an individual began placing hundreds of thousands of dollars into this company, saying that if they were to do this long term, they could turn that money and profit it because they were going to call those shorts. And one of the biggest risks that happens when you short a stock is you are required to give that back to the original individual who you borrowed it from, irrespective of what the price of the stock is. So let's say if you were to have borrowed the original share from the brokerage, sold it into the stock market, then waited for it to go down and then purchased it, that means you would have had the ability to then pocket the difference and give that back to the company that you originally borrowed it from, and you make a nice profit. On the flip side, what happens is if the bet is wrong and you believe that this company was going to fail, but then the stock price goes up, what happens is then if you were to sell it low and then the price goes high, you then have to go buy it at a higher price and then return that original stock back to the individual you borrowed it from. So it's pretty ridiculous, because what is happening right now is that the individuals on Reddit are pumping the stock price to astronomical levels where these hedge funds are actually needing to be bailed out again to be able to pay off and purchase these stocks to give it back to the original company that they borrowed it from. This is a remarkable instance, and it doesn't seem like there's anything stopping it. And why I think this is interesting for us as investors to be aware of is to see some of the recent trends that have transpired that are going on throughout our economy. I recently talked about Bitcoin, and we saw how that just shot up to the moon, and now it's gradually come back down. But with the social media influence that we see on various companies, whether it was on Bitcoin or whether it was on Tesla, or what we're seeing right now with GameStop, or what we're seeing with other companies like AMC or Bed Bath & Beyond, or other groups like BlackBerry. I mean, it's remarkable that we are seeing the influence that social media has in our society, where it can actually influence the price of a stock. So what we have right now is one of the most remarkable instances, and it's one of the riskiest bets that's being placed. But what's fascinating to know about this is the individuals on Reddit who've been going through this process, having the ability to go and challenge, almost in a David and Goliath sort of circumstance, where they're challenging these hedge funds. What they are doing now is some of them are actually making a good amount of money. There's stories of individuals already paying off their student loans. There's even a third grader who made $3,200 in this instance, and others who've actually made hundreds of millions of dollars, with the original person who invested back in 2019 up to having the ability to have almost $1 billion they made through this process. So clearly this is causing a lot of momentum, and people who are watching are wondering how to jump in and actually make a profit in this instance. And what I want to offer is a huge disclaimer with red blinking lights and tell you this is one of the riskiest type of investments ones that you could even be a part of. The original hedge funds who've gone through this have shorted a stock and made a bet. And when you make a bet, you're taking a risk. So that risk is now coming to ruse them because they are actually going to be on the foot of the bill and having to pay this off. Now, some people were very, I would say, sophisticated in their ability on Reddit to actually pump up the price of the stock, and they're profiting right now. But it's also risky because there are certain regulations and rules with the government. They in government actually have a rule against what's called pump and dump. And what that means is when you actually try to artificially pump up the price of a stock and then you sell it and make a profit. So let's say if you were to go and just call a bunch of your friends and be like, hey, this stock is great, I really think you should go and buy it after you've bought it at a low share, and you go and do that to a bunch of different people, artificially inflating the price of the stock, and then you purchase it and exit, that's called pump and dump. That was actually what you saw on The Wolf of Wall Street, and the individual who was actually the main character on Wolf of Wall Street actually just said that this is happening right now is basically a modified version of pump and dump. But what is fascinating about this is that it's technically not that, because the conversation that's happening on Reddit is right out there in the open, where they're just all saying we're going to go and buy these stock prices, or get these shorts and actually call the put. So it's a really interesting time for you to be wondering what's going on in the stock market. But the most basic thing for us to understand is that this is a risky bet that was taken by hedge funds that they've been doing for years and taking advantage of struggling companies and making a lot of money off of them. And now these individuals on this Reddit are actually calling back and basically pushing back against them. Now, I would say another thing to be aware of is that clearly we have a bit of a David and Goliath scenario going on, and individuals like millennials like myself and maybe yourself realize that we've had a lot of negativity coming our way over the last couple of decades, specifically from the financial sector. Like I previously mentioned, the dot-com bubble. We had the toxic asset relief plan that actually went into effect back in 2008, 2009, because Wall Street went ahead and they had toxic assets and didn't allow mortgages to be backed properly, and then we had to foot the bill and bail them out. So what we're seeing is that there's a bit of legitimacy behind what is happening right now. It might be one of the reasons why Elon Musk tweeted out and said GameStop really appreciated what was happening right there, because he previously had individuals try to short the Tesla stock, and that did not work well for them. He actually made shorts as a way to kind of get after those people. So what you're going to see is there's an individual opportunity right now where we don't know where this is going to go. Potentially we could see this skyrocket to the moon and the price not go anywhere, but eventually it looks like it's gonna have to crash. And what we also have going on here is an issue that's being brought up specifically around financial regulation. Another fascinating element associated with this particular story is what is going on with Robinhood. And Robinhood is basically the gateway for amateur investors to get into the market and purchase individual stocks. As I previously mentioned, it's a way that people can go on their phone or on their computer and trade commission-free without all the fees associated with going through a formal brokerage. And if you want to get a free stock, feel free to click the link in the description. You can actually get a free stock there if you want one from Robinhood or if you want one from WeBull as well. But flipping that over a little bit further, what we found is that Robinhood became so infiltrated with the number of volume of shares, people purchasing this particular stock in GameStop, they actually decided to halt the ability for people to purchase that individual stock, as well as for AMC and others. And this caused an uproar, not only from people utilizing the Reddit on Wall Street bets, but individuals on social media, even leading all the way to Capitol Hill, where you had both political parties then piling on Robinhood saying they made a bad decision, from AOC all the way to Ted Cruz. And that's your two different ends of the political spectrum. And they challenged Robinhood and say, what the heck are you doing? And Robinhood is basically trying to justify it, saying that they're under financial pressure, and also they want to protect the institutions and their investors against what's happening with this particular volatility. After Robinhood halted the trading ability for people to purchase this particular stock from GameStop, then the price fell dramatically, almost 60%. And now what we're seeing is just recently, Robinhood is now allowing the people to be able to go and purchase it again. And we are seeing the stock price shoot up in its futures. So what we're going to have happen now is an uncharted territory, because this story doesn't seem like it has an ending. Because whereas when you purchase an individual stock and go ahead and do that, the worst you can do is lose all your money because it goes down to zero. The stock price can go to zero. But on the flip side, there is no particular determination or end for how high a stock can go. So what we're seeing right now is uncharted, because if people continue to pile into GameStop, it's already above $400. It could go to $1,000 or beyond. And those individuals who took that original bet, those various hedge funds, are going to have to foot the bill for this, because they took that risky bet back in the day, and now people are calling them out on it. So I don't want to be so down on hedge funds because I know that they also do okay things out in the economy and they put money into different companies, but they've also taken a lot of advantage of people in different generations, but they also make their evaluations based off of what they think the fundamentals of a company are. So right now it doesn't appear as though the people who are investing in GameStop believe that the fundamentals of the company are that strong. They're really just kind of putting up the overall price of this and trying to basically do their best to make money on this. Now there is good news for GameStop because they actually brought in a new individual onto their board, and that individual came from Chewy.com, and they're bringing in more technology. So it actually could be that this company could become more technologically advanced and actually be worth a value that's going up right now. Maybe not the highest levels it is, but really could be worth going on an upward trajectory. So it really shows the risks involved when you go into the stock market, and if you try and do sophisticated types of trades, whether it's calling stock options, doing puts, or derivatives, or anything like that. That is why on my channel, what I try to focus on for all of us is maintaining a long-term financial strategy when it comes to your investment portfolio. I like utilizing index funds where I invest into a broad base of companies that follow the S&P 500 and generally track the overall performance of the stock market, which historically provides a very stable return if you're looking for long-term results without all the heartache and the headache associated with the volatility we're seeing right now. Now, one of the benefits when you go into this more risky territory is obviously you could make a lot of money, but also you could lose a lot of money. And that's my biggest concern right now. And one of the reasons I wanted to create this video is that if you're hearing about this now, it might be too late to jump onto this bandwagon. I could be wrong about that, but I think your money is much better spent if it's placed into proper accounts like a Roth IRA, a 401k, and if you invest into a broad base of companies that you believe have a good track record, have good fundamentals, and are having a long-term trajectory moving forward, I think that's going to be your best bet long-term. But that is completely up to you. If you want to go and try and ride this train, hey, might as well consider it. But also you might want to think about the trends that have happened previously and how we could potentially hit a trend moving forward. Like I mentioned, whether it was cryptocurrency, what we saw happen with Tesla, what we are seeing happen right now before our eyes with GameStop, you could potentially see what happens the next time a group on social media identifies a company that they want to push up to the moon. Maybe you could get in at the right time. So I'm not saying it's a terrible thing to do, but it's just something that you will be super risky and be prepared to lose all of your money. And if you're one of the individuals putting a short on a company, you don't really understand how much money you could lose looking at what just happened to these various hedge funds. So that's just something I think is important for us to understand, specifically as disciplined investors wanting to secure our financial futures. Now, the technical term of what this Reddit group is doing to these hedge funds is called a short squeeze, where basically they identified the short that was happening from these hedge funds and they're squeezing them for as much as they possibly can by pumping the price up of this particular stock. And they're doing it not only with GameStop, but with AMC, and they're already pivoting to other companies. So I would keep your eyes out for BlackBerry, for Bed Bath & Beyond, and for others where they're potentially moving these companies forward. So it's just something to be aware of. It's fascinating, and I would say from watching on the sidelines what you're seeing with these hedge funds who have been so sophisticated and really manipulating the markets previously and now trying to figure out a way to get bailed out again, I don't really have too much empathy for them in that respect, because what is happening is they took a risk and now they're losing big on that particular bet. So it's something that you can be just mindful of and understand that once you get into the intricacies of the stock market, there's a lot of room for a lot of bad to happen, but there's also room for good to happen and potentially for you to make a lot of money. So it's just something you really want to factor in when you're going through this process, but bear in mind that the sophistication and level of understanding and the necessity to have perfect timing when you're doing things like this is very much what is required. So if you are not a day trader, if you're not someone who's constantly monitoring the market, you really want to step back and maintain a long-term strategy moving forward. And once again, I just want to give a big disclaimer. I'm just a guy on YouTube. I'm not giving you financial advice. This is for entertainment purposes only. But what I do want to do is give a big fist bump over to Wall Street Bets for what they've been doing and how they've been putting this together, because even though some of those people are a little bit out there, I would say that the overall ethos of what is happening right now is actually pretty fascinating. And for that purpose alone, I will give them a quick shout out and just say good on you. And for those different hedge funds, hopefully they can correct themselves and not over leverage a company. And one of the things that you'll find with this is that the company GameStop was having more shares that were shorted than shares the company actually had. It was actually 140% of their shares were shorted. So when you have that happening for a company, it really shows that something is off with the system. So if this does any good, what we're seeing right now is that even the presidential administration commented on this the other day, where they are monitoring the situation. Hopefully this will lead to better and more appropriate guidelines being approved by the SEC, where we will have a fair approach towards what we can do moving forward in the stock market. So obviously you can still benefit from approaching certain things this way, but hopefully this democratization of our investment strategies by utilizing online platforms such as Robinhood, WeBull, and others will allow us to have a better approach where these hedge fund managers and these different companies that are more inside ball players won't always have the inside information and ability to make all of that money. Hopefully more people will then become more aware and educated and understand how they can move into the market and make money themselves. Once again, not trying to short a stock or pump up and dump a price of a stock, but have an actual approach where they can invest in the companies long term. Like I said before about Robinhood and WeBull, that's where you can go if you want to purchase individual stocks. I personally like to use Wealthfront because I can buy ETFs through there, and it's a much more simplistic approach, a passive approach, and it will tailor your overall investment strategy based on your risk tolerance. So that way you won't have to have an ulcer when you're seeing what's going up and down in the market. It will calibrate according to your risk tolerance as a whole. So hopefully if you want to do that, feel free to check it out. I put a link in the description as well. All right, so quick recap of what we have going on. GameStop was being shorted by hedge funds. A group on the internet worked together to collaborate and call the short and actually squeeze it so they pump the price of the stock up. So now that's why we're seeing GameStop prices go up significantly. Robinhood then decided to halt trading because it got too volatile. Then everyone got upset with Robinhood. Robinhood retracted, and now they're allowing people to buy again, pumping the price up even further. Now we have individuals in Washington calling for more strict regulation, but also for the democratization of investing, so that way these Robinhood applications and others allow people to go and play by the same rules as these hedge funds. And then you and I watching on the sidelines saying, what in the heck is going on? So what we should do for our strategy is make sure we stay the course and do what is wise long term by maintaining that approach overall. And where you'll see this go from here, who knows what's going to happen? All I can say, it's fascinating, it's really entertaining, and ultimately it just shows how risky this environment is and how important it is for you and I to be wise stewards of our finances so that we can achieve our long-term goals and be able to have more time with our friends, more time with our family, be able to pursue our ultimate pursuits, our passions, and to make a positive impact in this world. So with all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would really help the channel out for the YouTube algorithm, help push this video, other people might need to hear it. In addition, if you have any questions, please comment down below. I'd really love to hear your thoughts on this one because this is fascinating, and also I'd love to do any research for you and try and answer any questions for you so we can better understand this issue and other financial issues so we can make well-informed decisions moving forward. And last but not least, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that makes an impact in your life and encourages you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.